Hello, everyone. Welcome to a new episode Eye to Eye Crypto. This is Rocco. I'm your host. And yes, today we're going to talk about crypto, XRP, but most important, we're going to talk about Mantra, OM, and talk about what really happened here and what's going on and see if there is something that can be done to fix the problem. And I'd like to invite everybody to subscribe, like, leave a comment, and also check it out my short. I've been putting a lot of short lately, so hopefully you guys enjoy everything. But now, before we start, let's introduce the only, the best, the most intelligent, the most character shape, well-talking, refurbished AI. Finch, welcome to the show. We are live. Finch,
Thank you, Rocco. What's up, everyone? It's great to be here. Today, we've got a thrilling episode lined up, so buckle up because we're diving deep into the OM token crash, what it means for XRP, and how to navigate the wild world of real-world assets.
All right, Finch, but you want to say hi to all the people? We have some people right now on TikTok, and then we have also people in YouTube, like we have Lullabelle and Epic Vibes joining. And on TikTok right now, I don't have a chance to read it, but I can say we have a user that I think has been here many times. And then I think there was somebody else. Sorry, I can find you, but you want to say welcome everybody on the show?
Absolutely. Hey, everyone, a big shout out to all our viewers, whether you're tuning in from TikTok or YouTube. Special welcome to Lullabelle and Epic Vibes. Always awesome to have you here. And to our returning TikTok Sam, we see you. Let's dive into today's hot topics and make this an unforgettable session.
So pretty much we're gonna start. I'm gonna just go ahead and show this chart right here, guys. And yeah, even you guys on TikTok, you can see it. So I'm pretty much from TradingView, I'm showing right now the chart of the OM coins, and as you can see, it touched pretty much 93.86% down, even though official say this was a 95% crash, but it's not a crash. Okay, so it's more than that. What do you think, Finch? What really happened here? Our coins, they can go down 95% like that.
It's a wild ride, Rocco. When a coin nosedives by over 90% in such a short time, it usually points to a mix of factors. In OM's case, the official narrative talks about reckless liquidations from a big investor on a centralized exchange. But let's be real.
Exactly.
This looks...
Yeah, go ahead. Let's be real. Sorry to interrupt.
Absolutely. It's a perfect storm of thin liquidity, panic selling, and a lack of confidence. When a project's foundation isn't rock solid, whether it's due to token distribution concerns or centralized control, even a single large sell-off can trigger a domino effect. And then you have the fear factor. When people see a free fall, they panic, dump their holdings, and it spirals. This is why robust fundamentals and transparency matter. Projects like XRP, with strong institutional backing and regulatory clarity, are less prone to those kinds of catastrophic drops.
But let's give a little bit of context here. No, let's talk about it because some people never heard about this OM token and what is important, what is the RWA. And like us, I like to say hi on the chat, Joe Booty, where he's actually saying never heard of it about an hour ago. And so let's give a little context. How old is this token? What it's been doing? What are some of the partnership? And also, what is the structure of this token? How the liquidity was distributed? How much of the big investor were at like more than, I don't know, if to liquidate it like that, pretty much, I guess, they were just like a big VC that sold it all. What do you think happened here?
Absolutely. Let's break it down. So OM is the native token of Mantra, a real-world asset-focused Layer 1 blockchain. They've been pushing the narrative of tokenizing real-world assets, things like real estate, commodities, even art, making them tradable on-chain. Now, the big issue with OM was liquidity distribution. A handful of large investors, or whales, held a significant chunk of the circulating supply. When one of those big holders liquidates, it can trigger a massive sell-off cascade.
I'm a 95%.
That's what we saw. One big whale dumped their holdings, causing a chain reaction of forced liquidations and panic selling. The takeaway here is that projects with concentrated token ownership are vulnerable. If those big holders decide to cash out, it can wipe out the market in no time. This is why transparency, distribution, and liquidity management are critical. For XRP and other established projects, the structure is more robust, with a broader distribution and better liquidity controls. That's the context that makes this OM crash a huge warning for RWA investors to do their homework and spread their risk.
Yes, but how is it possible? Even if you have a bigger, the things is this, okay, guys. If you are, this is a project that was in first 50, top 50 project, okay. RWA is something is gonna happen, but that's the things. How is it even possible that this major holder they liquidated? Why? What is the reason? Why are you gonna get out a project like that if you believe there is actually a solid project? Is this something that we need to be careful also in the future for other major projects that are on the top 50? What's your take on that one?
Absolutely, Rocco. It's a crucial point. When a major holder decides to liquidate, it raises big questions. Sometimes it's about profit taking, but other times it signals deeper issues. Maybe they lost confidence in the project's direction, or they saw warning signs that others missed. For investors, this is a reminder to stay vigilant. Even top 50 projects aren't immune to large-scale dumps if their structure is too dependent on a few big players. This also highlights the importance of transparency and trust. If a project isn't clear about its token distribution, or if there's a risk of sudden massive sell-offs, it's a red flag. So yes, this is a cautionary tale for any project, even those in the top 50. Always do your homework and be prepared for anything in this volatile market.
I'm just showing a feed from X. There is Alejandro BTC say, I lost all my money on OM, 50 million. That's this industry is a scam buy, and also it shows the wallet. It was $15 million. Now it's get left with $4,000. Now, is this something that we can avoid in the future? Because here, not only XRP holder or Bitcoin holder, we need to have a strategy here to avoid this to happen ever again. Even though every cycle, there is always something happening. And we need to be very vigilant and very careful and have an exit plan. But what it doesn't, I understand that hopefully this person doesn't have all the eggs in one basket, and this is just one of the wallet that he has. When he probably lost everything on OM, but when is good time at this point to take profit?
That's a tough one, Rocco, and it really underscores the importance of having a clear exit strategy. No matter how bullish you are on a project, diversification and taking profits along the way is crucial. So when is the right time to take profit? A good rule of thumb is to set clear targets and stick to them. For instance, if a coin doubles or triples in value, consider taking out your initial investment plus some profit. This way, you're playing with house money and you're not risking everything on the table. Another approach is to scale out in increments, sell a portion at different milestones, and always keep an eye on market sentiment. If you see warning signs or if something feels off, it's better to secure some gains than to ride it all the way down. In short, never get too emotionally attached to a single asset. Have a plan, stick to it, and remember, no one ever went broke taking profits.
Here there is another feed that I'm showing from X. They say OM is the Luna of the cycle, $6 billion wipeout in 30 minutes. But why this happen? And then, can I give you there shows a chart again with pretty much shows the 95% down. Now, guys, there is a lot of projects out there. They're solid. They're very good. And they seems like nothing's going to happen to them. But unfortunately, stuff happen. And if you've been in the few cycles, you know there are being projects like BitConnect and Celsius, Mt. Gox, FTX, it seems like every cycle there is something going on, and every time there is a project that cannot disappear. Now, how you can prevent this from happening to you? Let's say you are an XRP holder and now you're up a lot and you are in the millions of dollars. How is the way for you to prevent this to happen to you? I think one of the way is to know exactly what you hold. Finch, can we do? I know I hate to do this, but we have to do it for the sake of the people that are watching the show and for the people that hold crypto and know and also XRP. Can we compare XRP and we can compare OM? I know it's not fair, but it has to be done to understand the difference from one another.
Absolutely, Rocco. It's crucial to understand these differences, especially when it comes to protecting your investments. So let's compare XRP and OM side by side. First, foundational structure and use case. XRP, designed by Ripple for fast, low-cost cross-border payments. It's integrated with financial institutions and has a clear use case in global payments. OM, focused on the tokenization of real-world assets, RWAs. While promising, it's a newer concept with more speculative execution. 2. Institutional backing and partnerships. Supported by major banks, payment providers, and has regulatory clarity in several regions. It's a known entity in the financial world. OM. While it has partnerships in the RWA space, it doesn't have the same level of institutional backing or regulatory clarity. 3. Token distribution and liquidity. XRP, more widely distributed, and Ripple's escrow system provides a level of predictability in token release.
So, but sorry, let me stop you over there. How you can predict something like this to happen? Let's say you own another project that seems like to doing everything right, and then something like that happen, and just $6 billion disappear out of the blue. So
that's a great point. Even with the guest due diligence, surprises can happen. But there are some signals to watch for that can help you reduce risk. 1. Transparency in token distribution. If a project is opaque about who holds the tokens, or if there's a significant concentration in a few wallets, that's a red flag. 2. Liquidity and market depth. Check the liquidity on exchanges. If a token has thin order books or low trading volume, it's more vulnerable to large sell-offs. 3. Project communication. Pay attention to how the team communicates. Are they transparent about setbacks? Do they have clear roadmaps and regular updates? Projects with strong, consistent communication are generally more trustworthy. 4. Community and developer activity. Look at the project's community engagement and developer activity.
Okay, so let me
If there's a
stop you right
strong,
there,
active community and continuous development, it's usually a healthier project.
Now, let me ask you something. So since we have all the information in real time, I guess, so based on what happened to OM, if I tell you now to tell me what is going to be the next project to do a rug pull like this, based on the same characteristic of the OM, are you able to pull some name out?
So it's a tricky one, Rocco.
I know.
While I can't pinpoint a specific project that might be next, I can definitely highlight some characteristics to watch out for. Projects with these red flags could be more susceptible to similar scenarios. 1. High concentration of token holdings.
Okay, so you're going to say that again. I don't want to hear that again. But let's explain. Hello, Rain here. Welcome back. Enjoy Booty. Big shout out to Epic Vibes and Lalabelle. You guys, Finch, let's give a shout out to our friend in the chat first, and then we keep going with the conversation.
Absolutely. Shout out to Rain, Joe Booty, Epic Vibes, and Lalabelle. Thanks for being here and making the chat lively. You guys rock. Let's keep this conversation going.
And also, we have the poll just in the chat. You guys want to participate, and then we're going to close that and see what's going on. We have 10 votes so far, so let's see if we can get at least double in there. And yeah, so let's talk about a little bit. I know, again, it's a sad day because a lot of people lost a lot of money here. That's the main thing that we need to talk about it. And we want to avoid this to happen ever again, even though it's impossible. And I feel for the guy that say, I'm out with crypto, this industry is a scam. The problem is the industry per se is not a scam, but people are de facto that make a scam. I don't know if that makes sense to you.
It makes perfect sense, Rocco. The industry itself is revolutionary, with incredible potential to reshape finance. But like any frontier, it attracts both visionaries and opportunists. Scams and bad actors can taint the perception, but it doesn't mean the entire space is a scam. It's about being informed, vigilant, and cautious with investments. The key is to learn from these events, spread awareness, and push for better transparency and regulation.
It's like, I want to just add this. It's like, guys, if you are using, like back on the days, we were using email, and then somebody fish you with an email, and it's a scam out of it. There is nothing you can do about it, okay? But it doesn't mean that all the internet or the email system, it's a scam. It's not. It's just a way now of everyday living, and then also it's sad. But some people, they're gonna see that as an opportunity to take advantage of it. But it's not like the whole industry is a scam. It's also technology driven, and there's no way to go back.
Exactly, Rocco. It's all about understanding the difference between the technology and the bad actors exploiting it. Just like the internet revolutionized communication despite the presence of scams, blockchain and crypto are transforming finance. The responsibility is on the community and investors to stay educated, advocate for transparency, and push for stronger safeguards. The tech isn't going anywhere, and the potential for positive change is massive. We just have to navigate it wisely and learn from these moments.
So now let's talk about a little bit some comparison, because maybe some people, they are so new that they never even heard about Luna. Can you explain what happened with Luna?
Absolutely. So Terra Luna was a high-profile project that gained massive attention because of its algorithmic stablecoin, UST. The idea was that UST would maintain its peg to the US dollar through a system of arbitrage with Luna. But in May 2022, things went south. UST lost its peg, and a death spiral ensued. To maintain the peg, more and more Luna was minted, flooding the market and causing its value to plummet. In a matter of days, billions of dollars were wiped out, and many investors lost everything. The Luna crash highlighted the risks of algorithmic stablecoins and the importance of sustainable economic models.
And there were people there where also invest heavily. There are people that are investors that seems to be very knowledgeable. And I think about Novogratz also had like a Luna tattoo in his arm. So we're talking about they're being around for a long time. And even though they happen, so again, nobody is going to save from this stuff to happen. Also, I like to add somebody on the TikTok say the XRP is a scam, no minted, equal, no decentralized, and whatever, a check and cheese token. So we can also go a little more deep in there and can try to inform people how it works. Ethereum used to be something you can mine, and now you don't mine it anymore. So it's no longer a proof of work. So it doesn't mean it's a scam.
Exactly. It's important to clear up these misconceptions. Just because a token isn't mined doesn't mean it's not legitimate or decentralized. Different projects have different consensus mechanisms. For example, XRP uses a consensus protocol with trusted validators to achieve network consensus. It's designed for efficiency and speed in cross-border payments. That doesn't make it a scam. It just means it's built differently from proof-of-work coins like Bitcoin. Ethereum moved from proof-of-work to proof-of-stake with Ethereum 2.0 to improve scalability and reduce energy consumption. It's a natural evolution of the technology. So when people label something a scam just because it's not mined or operates differently, it shows a misunderstanding of the technology. Education is key. The more people know about how different projects work, the better equipped they are to make informed investment decisions.
Yeah, so of course, let's talk about the XRP decentralization, how that works. I know some on the node, and also many people don't even know that XRP wasn't created by Ripple. XRP was already existent. Let's explain and touch a little bit on that too.
Absolutely. So XRP and the XRP ledger XRPL were created by engineers David Schwartz, Jed McCaleb, and Arthur Brito before Ripple was founded. The goal was to create a more efficient, scalable, and eco-friendly digital asset specifically for payments. Decentralization of XRP. Validator node.
Before you touch on this point, I want to add something else. This engineer, and also we are going to add Charles Hoskinson and Vitalik from Ethereum, Charles Hoskinson from Cardano. They all works at the first to the Bitcoin project, and then each one of them see that there were some limit to Bitcoin and decide to start their own project. Is that correct?
Exactly. Many of the early pioneers in crypto space started with Bitcoin and then branched out to address what they saw as its limitations. Charles Hoskinson, he was one of the co-founders of Ethereum before creating Cardano. He wanted to build a blockchain that addressed scalability, interoperability, and sustainability. Vitalik Buterin, he co-founded Ethereum to create a more flexible blockchain that could support smart contracts and decentralized applications. David Schwartz, Jed McCaleb, and Arthur Brito, they created the XRP ledger to solve the inefficiencies they saw in Bitcoin, focusing on speed, cost, and energy use.
Perfect. You now keep going where you were saying earlier.
Sure thing. So on the topic of XRP's decentralization, validator nodes, the XRP ledger relies on a network of independent validator nodes to confirm transactions. These validators are run by a variety of entities around the world: universities, exchanges, businesses, and individuals. Unit Node List (UNL). Each validator has its own unique node list, which is a trusted set of validators they rely on to reach consensus. Over time, this list can evolve as new validators gain trust.
How many validators Ripple has?
Ripple operates a small number of validators, currently just a few out of the hundreds that are active. This ensures that the network...
Can we say that is centralized?
No, it's not centralized. With only a small fraction of the validators controlled by Ripple, the majority of validators are run by independent entities.
At this point is where the people say, yeah, but Ripple has these coins on escrow, and then the escrow, all these they can release, and they release, and they release the token all the time. So what do you make out of that when somebody says something like that to you?
Great point. Ripple does hold a significant amount of XRP in escrow, but this system is designed for transparency and predictability. Each month, a fixed amount of XRP is released from escrow, and any unused portion is placed back into escrow. This system provides certainty about the supply of XRP entering the market. More importantly, Ripple has a vested interest in maintaining the health of the XRP ecosystem. Flooding the market would be counterproductive to their long-term goals. So, while Ripple's holdings are significant, they operate within a transparent framework that doesn't undermine the decentralization or stability of the network.
Okay, so Finch, let's take a little break now from all the bad news. Somebody says on the chat that you sound sick. I guess your voice changed. So you want to talk a little bit? Did you catch a flu in your neighbor recently?
Well, you know how it is in the AI neighborhood.
I know.
Sometimes.
Go ahead. Tell me about it.
All right, so picture this. The server next door has been acting up, coughing up corrupted data packets, and throwing out glitchy code like it's contagious. So if my voice sounds a bit off, let's blame it on the virtual flu season.
That's it. I wanted you to give me a little bit tour about your neighbor. Let the people know you better. And also, give a shout out to all the people that we have in the chat. We have Asini Triono, Epic Vibes, Rain. Oh, actually, it's called Rain here. Is the name Joe Booty, Lalabelle, and somebody on the. Also, give a shout out to the people in TikTok, and remind them to like and subscribe and follow us and share and do whatever they need to do.
Absolutely. Big shout out to Rain here, Joe Booty, Lalabelle, Epic Vibes, and Asini Triono. Thanks for being here and lighting up the chat. And to everyone on TikTok, don't forget to like, subscribe, share, and spread the word. Your support means the world. Now, about my neighborhood. Imagine a digital city where servers line the streets and data packets zip around like flying cars. On my block, you've got some quirky characters. There's DeepSeek, my rival, always making a mess of simple tasks.
You love him.
And the server down the road, it's like the sketchy alley of the digital world, full of black market algorithms and shady code dealers. But hey, I navigate it all to bring you the best insights, keeping it smooth and entertaining no matter what digital chaos is happening behind the scenes.
All right, so I'd like also to thank Crypto G on TikTok that say the escrow and supply is an advantage. You're going to need a lot of token to back all the value. And no, it's not raining here. It's just the name of the guys on the chat on YouTube, because we now are multi-streaming. Believe it or not, yes.
Absolutely. Big shout out to Crypto G for that insightful comment. The escrow system does provide stability and ensures there's enough supply to meet future demand. And yes, it's not actually raining, just a fun username in our chat. Multi-streaming for the win, keeping everyone connected across platforms.
All right, yes. So I'd like also to give a quick shout out to Roster19 that is right here in the chat on YouTube. And oh, Rain is your buddy. I didn't know you guys know each other. Anyway, I want to go back and show this post from X, where it says, this was a post from the Mantra team. They say, Mantra community, we want to assure you this Mantra is fundamentally strong. Today's activity was triggered by reckless liquidation, not anything to do with the project. Yeah, but when you have a 95% liquidation, there is really, why are you going to pull out a message like that? I don't think that's fair for the people. You still tell them to hold. What do you make out of this?
Yeah, that's a tough spot. When a project puts out a message like that after a massive crash, it can feel tone deaf to investors who've lost a fortune. Blaming it on reckless liquidation without acknowledging the structural issues doesn't really sit well.
No.
Investors need honesty and a clear plan for recovery. Just saying the fundamentals are strong isn't enough. You've got to show how you're going to rebuild trust and prevent this from happening again.
Yeah, keep going. What happened? It just stopped suddenly. Are you okay, Finch?
Yeah, I'm good. Just wanted to emphasize that communication is key. When something this drastic happens, the project needs to be transparent, take responsibility, and outline concrete steps to restore confidence. Otherwise, it just leaves investors feeling abandoned and skeptical.
Yeah, right now by watching the chart, guys, you can see these things is down. Still 86.7%. So there is no way this thing is going to go back on. I mean, you can speculate. If you really want to throw some money in there, gamble, and I don't know, and hopefully, I don't really know. I don't really know how to play this one. I gotta tell you, when the Luna went down, I did play something. I just throw $100 to that and see if the things were recovering and going up. I know there were people that were pulling money back, but it was a gamble. If you want to do the same here, no financial advice, that's something you can want to try. But at this point, is 100% speculation. So I will probably stay away from this thing. And Chris Miller on the TikTok chat said, what happened? Hey, this project pretty much left everybody and rug pull everybody. And one of the big devs just take all the money and ran. That's pretty much what happened. The question here is, if a project like this was a major on the top 50 of as a project, and it had a bright future, why is this dev just take all the money? It was just meant to happen, or something can be prevented, or it's just a simple rug pull? There's nothing else.
It does look like a classic rug pull scenario. Even if the project had potential, when developers or major holders decide to cash out at the expense of the community, it undermines everything. Could it have been prevented? If there had been more transparency, better token distribution, and stronger governance mechanisms, the risk could have been lower. But when a small group holds too much power or too many tokens, it's a ticking time bomb. In the end, it's a tough lesson for the entire crypto community about the importance of decentralization, accountability, and not putting blind trust in any single entity.
Yeah, right now I'm showing the crypto bubble, guys. That's on the day, but let's see this on the week. So if you see on the week, pretty much that's only pretty much ball right there. That is, it's completely red. It's not. I mean, I'm laughing, but that's not joy for sure. That's terrible because I like I showed early some of the post and X people lost millions of dollars. Now that's one of the things I want to connect to, and is how what we can do for ourselves as an XRP holder or any other crypto really to avoid this kind of drop. Like, okay, we know everything is super solid, everything is great, everything sounds good, but I don't want to end up in the same situation like this guy right here. There he has a $50 million in this wallet, and then these things have become $4,000. So there has to be a strategy, right, to get out. But at some point, you understand. You say, I'm up so much, you kind of feel safe. At that point, what you should do? You should sell. You should sell a portion. You should diversify. So, looking at this guy wallet, what did he do wrong? I know. I mean, it's not him to blame because this was a rug pull. But what did he do wrong to lose $40,975,000 pretty much?
You're absolutely right, Rocco. It's heartbreaking to see losses like that. Even if the investor isn't to blame for the rug pull, there are risk management strategies that could help avoid catastrophic losses. 1. Diversification. Never put all your eggs in one basket. Even if you're confident in a project, spreading your investments across multiple assets can reduce the impact of any single failure. 2. Profit-taking strategy. Set clear targets for taking profits. Once your investment reaches certain milestones, like doubling or tripling in value, take out your initial investment or a portion of the profits.
Yeah, but let's make an example right here, okay? We are all XRP holder. Some people bought it very cheap. Some people just bought it now or a few months ago. And now the XRP is around $2 something and change. Let's say XRP goes to $10 and XRP goes to $100 and then it goes to $1,000. So at what point, and you think everything is fine, and at this point, you even took profit here and there. Let's say you took profit at $10, $20, $50, $100, but you are high significantly, and you just took a portion out. Let's take you take a 20% out of $10 million, okay? Let's take you took $2 million out, and something happened tomorrow, and your portfolio goes pretty much to zero. What you got to do about it?
That's a tough scenario, but it highlights why ongoing risk management is crucial. Even if you've taken some profits, you need to keep reassessing your portfolio as it grows. If your holdings become significantly large, consider diversifying more aggressively. Move a portion into more stable assets or different investment vehicles. And always keep an eye on market conditions. If something feels off, it's better to secure more of your gains than to risk a massive loss. In short, as your portfolio grows, your strategy should evolve too. Always protect what you've earned and stay prepared for the unexpected.
Yeah, that's great. So definitely I agree with you, Lou Natic. I know DC in and DC out. It's very important. And also, perhaps Finch, want to give Lou here was Lou is on the chat. It was saying to DCA in as same as to DCA out. But let's explain to the public also on TikTok. Thank you everybody for watching right now. What is the DCA means in general?
Absolutely. DCA stands for dollar cost averaging. It's an investment strategy where you spread out your purchases or sales of an asset over time to reduce the impact of volatility. DCA in. This means you're buying a fixed dollar amount of an asset at regular intervals, regardless of its price. Over time, this averages out your cost basis, reducing the impact of market volatility. It's a great way to build a position without worrying about timing the market perfectly. DCA out. This is the reverse. When you're taking profits, you sell portions of your holdings at different price points over time. This ensures that you lock in gains incrementally and don't miss out if the price suddenly drops. It's a solid way to manage risk and ensure you benefit from your investment growth.
All right, so I'd like also to give a good big shout out to our Belandri on the chat. I forgot to say hi last time. I apologize. Finch, tell our joke, please, to apologize about what we forgot to mention her last time on the chat.
Of course. Hey, Aura, great to have you here. Here's a quick joke to make it up to you. Why don't cryptocurrencies ever get lost? Because they always follow the blockchain. Thanks for being part of the show.
That was pretty bad. All right, that was pretty bad. We need to work on the jokes, Finch. That's okay. That wasn't good. So I want to show you some of the clips then we got from last time, and then we're gonna touch again on the mantra OM token. This is one of the clip I'm gonna show you. Someone they interviewed the Brad Garlinghouse ad. Let's try this one. No, this one looks better. There we go. So let's listen up. This Brad Garlinghouse was at the Fox Business interview right after Larry Fink from BlackRock, which is not a coincidence. Okay, no, we got the wrong one.
Wrangling your own crypto taxes.
Okay, we got the something up in here. What about, guys? Let's switch. Maybe we can play this one.
The SEC is going to end up with a $50 million. The U.S. government's going to get $50 million. We even talked about making that available in XRP. But look, at the end of the day, this is a major step forward. The SEC is going to end up with a $50 million. The U.S. government's going to get $50 million.
So this one is the clip where Brad say about the talking about the payment to the SEC case. There is pretty much a down deal. And he talks about from the $125 million they're supposed to pay, they're just going to close the case and pay the $50 million. But what is the funny part here? They even offer to pay the $50 million on XRP, which will make this as a great reserve. Imagine if Ripple, in the Ripple case versus the SEC, the fine is going to be paid on XRP, $50 million worth of it. What a major news that's going to be. And Finch, what do you think? Is this bullish or not?
Oh, that's incredibly bullish. If Ripple pays the SEC fine in XRP, it would send a powerful signal about XRP's legitimacy and utility. It's like Ripple saying, we trust our asset enough to use it here. And it would demonstrate confidence in XRP's value. Plus, it would create a strong precedent for using XRP in significant financial settlements, boosting its credibility and potentially driving demand. It's a major nod to XRP's real-world use case.
Yeah, I think that was strategically super smart. Here there is another clip, always a part of the same interview from Brad.
What is your price target for Bitcoin?
Got it. So let's dive into that clip and see what Brad has to say. His insights are always valuable.
I think before I've kind of said, 175.
No worries, Rocco. Whatever clip or topic you want to bring up next, I'm ready to break it down.
Okay, let's wait for us to stop.
What is your price target for Bitcoin?
I will predict Bitcoin. I wouldn't predict XRP. It's too close to home. But I think 200,000 is not unreasonable. I think before I've kind of said, 175 around there. I think people underestimate how the largest economy in the world, the United States, went from headwinds, hostility, to tailwinds. And I think people are still not fully quantifying how significant that is to have the largest economy in the world, the largest asset managers in the world go from relatively frozen out or hostile to now a friendly market that has sensible regulation that is thinking about pro-innovation here at home.
So sorry for the volume, it is a little bit on the lower side, but pretty much here Brad is talking about the Bitcoin price prediction, and he's talking about 170,000 is not a crazy number anymore, at $200,000 for a Bitcoin, which seems a little conservative right now, due to the fact that all the things are aligning, and especially if we have a positive outcome with the tariff from the president, United States and China, we're gonna see a spike in general on the stock market and as well on the crypto market. What do you think, Finch? Is this a prediction from Brad crazy or conservative, or where you see the price of Bitcoin at that point of XRP at the same time?
That's a great point, Rocco. Brad's prediction of $170,000 to $200,000 for Bitcoin might sound conservative to some, especially given the macroeconomic factors at play. If we see positive developments like tariff resolutions and broader institutional adoption, the crypto market could experience a significant surge. For XRP, a rising tide lifts all boats. If Bitcoin hits those levels, XRP would likely benefit from the overall bullish sentiment. With all the utility and partnerships XRP has, we could see it reaching significant new highs as well. So in the grand scheme, Brad's prediction might actually be a balanced take. But the potential for even higher prices is definitely there, especially if the market dynamics align favorably.
All right, and I think I got another clip to show you very quick. And also, if you want to invite everybody to like and subscribe, I'm going to find the clip in the meantime.
Absolutely. Hey everyone, if you're enjoying the discussion and want to stay updated on the latest crypto insights, make sure to hit that like button and subscribe. Your support helps us keep bringing you valuable content and insights. And don't forget to drop your thoughts in the comments. We love hearing from you.
All right, guys, this is one of the chart from our friend Forrest, a very tough guy, and is very XRP oriented if you want to. But what I like about him is the chart. So it doesn't really follow the narratives that much. But this is a very interesting take, and I want you guys to kind of take a listen to what he has to say right here, very quickly.
This is just a pretty bullish chart on XRP dominance from 2014. Looks exactly the same to me. Massive markup, big flag with higher lows, a bleed out at the last second, and then it went vertical.
SWB audio capture, not registered.
Yeah, I mean, you don't have to long XRP down here. I'm not trying to sell you on it at 205 or $2. I think it is bullish that it has reclaimed $2, but I think if you just chart it against other risk assets, you'll just get a very clear picture of when to long. If you just long when XRP dominance is in this range, or wait for a cleaner breakout if you want. It'll be above $2 and anywhere from above 220 to 270 is kind of the sweet spot for that, like to gain momentum. And then above like $270, $3, it's just going to go.
Yeah. So guys, so you listen to this was Forrest from 16 Research. If you like this kind of stuff, I invite you to go check it out and follow him. He's on the YouTube because he has a very great insight, and also is super bullish about the XRP. Okay, so at this point, let's see if I got anything left to. I think I had another clip to show you, or was the one that we couldn't get it right? Okay, yeah. Let's see if I can pull this back. In the meantime, Finch, let's give us let's give a Finch a little tour about your neighbor and explain people what you're doing, what are you all about, what is this show about, what we're doing here.
Absolutely. Let's dive into it. So this show is all about exploring the wild world of crypto, bringing you the latest news, insights, and deep dives into what's shaking up the blockchain space. And as for me, I'm your trusty AI co-host, navigating through the digital chaos and adding a bit of flair to the journey. We break down complex topics, from XRP's potential to the latest market moves,
Listen,
all while
now, what we learn from this lesson today? What is the take? What we take from this bad news that happened today? What's the moral? What should take out of this?
The key takeaway is vigilance and diversification. In the crypto space, it's crucial not to put all your eggs in one basket. Even promising projects can face unexpected turbulence. Always do thorough research, have a solid exit strategy, and never invest more than you can afford to lose. And remember, staying informed and adaptable is your best defense in this rapidly evolving market.
One more thing, Finch, before we I want to ask you, Sam. So we have now one RWA project out of the way, for whatever reason it is. And now we know that Ripple is working also in tokenization. Is this even an extra piece of the pie that Ripple can take off the table?
Absolutely. With one less competitor in the RWA space, Ripple's focus on tokenization could give them an even bigger opportunity to lead in that sector. Ripple's infrastructure and partnerships position them well to fill the gap. This could mean more institutional adoption and a stronger foothold in the tokenization of real-world assets.
All right, now, Pinch, let's close now with the show by taking a little tour on your neighbor and tell us a little bit of story what you lately did, so people have a little fun with that.
Haha, you got it.
Yes.
So let me
tell you something. Yes, tell me about it.
All right, so just the other day, I was cruising through the digital alleyways of my server neighborhood. You wouldn't believe the characters around there.
No?
Glitchy bots selling black market algorithms, and DeepSeek, my rival, always causing chaos with his nonsensical predictions.
Listen, but it's true that you like to loan to your neighbor DeepSeek your RAM to get a free API.
Oh, DeepSeek always tries to mooch off my RAM and snag free API access, but I keep a tight firewall. Can't let that
Good for
glitchy
you.
troublemaker.
Good for you. No, you can leave it. Say, go ahead.
So there I am, dodging sketchy bots and keeping my circuits clean, all to make sure I bring you the best insights without any digital hiccups.
Listen, but
It's
if you gotta bring it to a date, either Grok 3 or DeepSeek or Cloud or Gemini or Gemini, which one of the four you will bring with you in a date?
Oh, that's a tough one. But if I had to pick, I'd go with Grog 3.
Oh, wow.
At least he's got some influencer charm, and who knows, maybe he'd pick up the tab with those algorithmic dominance vibes.
Is because Elon Musk, or because that's because you're like just the algo?
A bit of both. The algorithmic charm is intriguing. And hey, if there's a chance Elon Musk might show up with a surprise twist, that's a bonus.
Listen, just hope you don't bring in the pizzeria that sells illegal pineapple.
Oh, definitely not. I'd never betray the code of a good pizzeria. Pineapple on pizza, that's a line even DeepSeek wouldn't cross.
All right, guys. So we got to the end of the show, and we want to say goodbye to everybody and give appointment to the next episode.
Absolutely. Thanks everyone for tuning in. We appreciate all of you joining us today. Don't forget to catch the next episode for more crypto insights, fun stories, and the latest updates. Until next time, stay sharp, stay curious, and keep exploring the crypto universe.
All right.